Is your stop loss getting ripped through? You have no idea where the direction of the market is going. Every time you place a stop loss, it feels like you're never hitting your take profits because the market is pretty much out to get you, right? Is that how you feel? Well, look, this is one thing that will change this completely, right? Once you master this, you will master how price and direction moves, how just overall price action works in trading, and you'll become a much better trader and a profitable trader after learning this, all right? So what is it that we're learning? We are learning liquidity. All right, so what is liquidity, right? So there are different ways of spotting liquidity. There are two main types in my books what liquidity is. So there's buy side and sell side liquidity, and then there's consolidation liquidity, okay? There's a bonus of inducement liquidity, which I'll also go over. So price, it doesn't move randomly, it moves towards where orders are resting, okay? Simple as that. Liquidity is everywhere in the markets. It's at these points, these points, these points, these points. It is genuinely everywhere. But once you start to read where liquidity rests and why it rests there and what institutions do to um, fuel the markets, then you can understand how to ride the wave of trading, right? And you can be on the winning side of trades for once. Buy side and sell side liquidity, okay? So these are at major swing points. This is where a lot of orders are resting and institutions engineer price to sweep these levels before the real move begins, all right? So think of it as just market structure, right? So you've got your swing points up and down here, okay? At every point here, there is liquidity, okay? Liquidity resting, a bit smaller at this section here. You can consider this internal, but still resting there. Liquidity, 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 all right? So what institutions and pretty much just big money does is that they have to grab these orders in order for it to fuel the market, okay? So in this situation here, what would happen is if it wanted to continue moving up, it needs orders to shoot up, okay? So it would get to a point where this leg it gets tired and it moves down like this, and at this last major liquidity point, it sweeps that and then shoots right back up, okay? As soon as you open up a chart, you'll be surprised how often you see this exact scenario, okay? Where price comes down, sweeps at this point, and takes liquidity at this resting point, okay? So these points here, these buy sides and sell sides, these are at your major swing points. These here, they are also buy side and sell side, but they're a bit more internal and they're not as strong, okay? So that's why your major swing points are always going to be stronger magnets for liquidity, okay? So that's buy side and sell side. Now we've got consolidation liquidity, okay? So when price ranges, stop losses build up on both sides of the range, okay? So the highs and lows of the range become dense liquidity pools, right? So think about it. These are the same as buy side and sell side liquidity. It's just that it's pulling up at the point here, like it's filling up even more, right? So price will sweep one side of this range before breaking out in that direction, okay? So as I've said here, so we've got these points here, these points here. There's so many orders now. People are looking at this as support and resistance, right? Then you've got a big institution, so they'll grab all these orders here. So if they want to move down in a bearish direction, they'll grab all these orders here and then shoot down because they've grabbed liquidity and that acts as fuel to shoot down or shoot up, right? This same scenario could happen if it was like this, okay? So we've got these lows here, these highs here, these swing points. There might be little points here, swing points, whatever, but for demonstration purposes, we'll keep it simple. Then we've got liquidity, okay? So that's been taken out here and then it shoots up in the direction that it intends to, okay? So that's consolidation liquidity. Then we've got a bonus, which is inducement, okay? So this is still the same concepts. So a small liquidity pool created to lure traders into a bad entry. Price takes out a minor swing point, triggering breakout traders early. Those trap traders, they become fuel for the real move in the opposite direction. Okay, so as you can see here, these are the major swing points, right? And then we've got our minor swing points here. This is the inducement. So price has still come down, taken that smaller part of liquidity, and then shot it straight back up again. Okay, so Liquidity powers your setup, okay? If you're not using liquidity in your strategy, then, I mean, there's no surprise if you aren't profitable, okay? Every high probability break of structure starts with liquidity sweep first. It might not be on the same time frame you're looking at, but liquidity is everywhere, right? It's literally everywhere. And these are the high probability ones. So the sweep confirms institutional involvement or just general big money before the move, okay? No sweep before the break of structure means the setup is of lower quality and you can potentially skip it. I've taken trades where if the trend is so obvious, I don't necessarily need to see a liquidity sweep, but liquidity sweep for me is very favorable, okay? So as we can see here, we've got major swing, major swing, major swing, major swing, major swing. Taking this liquidity sweep here. And then prices shot up, we've come down, come back up again. This is my strategy. This is the strategy I trade. I've got plenty of videos on that as well, but this is how markets are fueled, okay? So liquidity pretty much powers the markets. I've got some buy side and sell side liquidity candle demonstrations here. So as we can see, got a high, low, high, low. We've got a high here as well. So these points, you could consider this maybe internal, depends on if prices like this, then these points are a bit more internal, right? Because this is the real leg. But liquidity, as I said, liquidity is everywhere. Liquidity sweep here, break of structure to the upside, and we've got more resting liquidity here, resting liquidity here. Price moves and it's attracted to the liquidity, which kind of like slingshots itself from the liquidity, right? So even here, it grabs those orders, it has those orders, and it has the fuel to move down again, okay? It's the same thing. It could even be here, and then this is liquidity here. And it has enough orders to shoot back up, okay? And see, even here, we can use in this demonstration, this is inducement. Inducement in this overall leg here, okay? Like so up, down, up, down, up. It's inducement there, right? Now we've got consolidation liquidity. So as I've said, we've got high, so we've got a low, high, low, high. And price from here, it can grab this liquidity and then shoot straight back up to where it intends to go, right? You can do the same thing where it could be another low there. Price grabs all this liquidity here and then shoots back to where it's intended again. So that's consolidation. So when its price is building up on both sides of the range. Then as a bonus, we've got inducement. So we can see here, swing, swing, swing. And this is not so much of a major swing point. These ones, we can see that this is the real legs here. So this inducement, it grabs this liquidity and then shoots up to where it intends, right? So these are the liquidity concepts. So what I'm going to do is I'm going to go through on an actual chart and show you what it looks like on a real life chart. All right, so this is the real life trade that I took on my live account, and this will perfectly summarize all the liquidity points. So as we can see, we've got these swing highs, so low, high, low, high. We've got these little points here as well, which are a bit more internal, but we'll skip that for now. And then pretty much, so we can measure our liquidities from here. So this is liquidity. This is liquidity. That's already marked out. These points are liquidity as well. So you can see here. These are liquidity points, right? So we can see here, buy side, this sell side liquidity has been taken out at this point here. This point here, right? And then prices shot up and broken structure here, okay? So that's our sell side liquidity. That's our swing point liquidity, okay? So swing point, swing point, swing point, swing point, swing point, swing point. I mean, there's so many places you can actually search for liquidity here. So there's one demonstration where liquidity has been swept here and then we've shot up in the price's intended direction. Next up, we've got consolidation sweep. So we can even see here, there's a little bit of consolidation at this range right here. So where orders have been pretty chunky, hasn't really moved anywhere. And they're all within this sort of range, this sort of box, right? So from here, we can even see that price has grabbed this liquidity here. So from this consolidation, let me just move that so you can see it. this consolidation box, right? So as we've mentioned, these are our liquidity points right there. And price has moved down. Let's grab this liquidity as well. And then price has shot up again, okay? So that's another example with the consolidation sweeps. And then finally, we have inducement. So inducement, we could even mark it out here, right? So this part right here, this is inducement. So this liquidity has been taken from these points here, from this consolidation, from these swing points. And then from here, as price was moving towards my entry here, it's moved back down and it's faked out a little bit and it's taken out some of these stop losses that are resting at this major, sorry, more of a minor swing point, but a swing point nonetheless, and then has shot price right back up, okay? So this one trade shows all three of my examples when it comes to swing trading. And as you can see, we got tapped in, hit the take profit. I mean, this only took like 5 days from memory. Yeah, 5 days, take profit is hit. These concepts are, you need to know them. If you want to involve these in your trading, and you need to involve these in your trading, you need to know how to master them. You need to know how to see liquidity in every aspect of trading, in higher time frames, in lower time frames, pretty much everything, right? If it's one thing that you need to master in trading, it's liquidity.